Welcome back to A Bite from the Money Sandwich, where we provide practical and easy to understand tips and ideas on how to manage your money better so as to let you retire with comfort and on your own terms. With over 30 years in the financial services industry, I've seen a real evolution with the way we talk about money matters, from the language we use to how we interact with our clients. I've also seen the change from a once male-dominated industry to a rise in women from both the professional side and from the side of seeking advice and coaching. These positive changes have occurred because of women like today's guest, who has helped change the way we talk and educate about money matters for the better. Today, I am lucky to speak with Julia Newbould, Managing Editor of Money Magazine, to talk about what she is currently up to, discussing her book with Kate McCallum called The Joy of Money and the podcast she hosts, Friends with Money. I should also add that any of the topics raised here today is general information only and not advice, and should not be acted upon without getting advice, as simply we don't understand your personal circumstances or goals and how it could affect your situation. Well, hi, Julia, and welcome to the show.
Thank you for having me, Marc.
I love your Money magazine and also the Money website, which has as its tagline, creating financial freedom, which I suppose when you break it down, that's what it's all about, having the financial freedom to whether you want to keep on working or actually travel the world. Have you had a chance to think about what your own financial freedom might look like?
My own financial freedom would be having time to do some creative things, spend more time with people I love, and just have the option of when and where I want to work.
Oh, okay. So does that mean a sea change or a tree change?
Not necessarily. It would, in those days where you can travel, which may come back. I guess I'd like to do a bit of traveling, maybe, live for 3 or 6 months somewhere else for a change. But at the moment, I like living where I live. So, yeah, not sure.
Yeah. Is there a favorite place? I have to admit mine is Italy, that I have that dream.
Italy's very much up there. Also England for me. I have family there, and like Italy, there's so many different parts of it that you can spend so many months doing different things and still feel like you're exploring something new.
Yeah. And if you've got a laptop, you can really work from anywhere now. It seems that way anyway. COVID's taught that.
Yeah, that's right. And I think, sometimes it's a bit up to employers to catch up with the mindset that the world has changed and we can do the work. And it's not about, putting in the hours, it's about getting the output that's desired.
Yeah, exactly. From the magazine website, it does cover everything of all areas of finance, from money, shares, super, property, to name just a few. And it is just an excellent, and I do recommend anyone to have a look. But in your view, why is it actually so important to help educate Australians on money?
I think where people are born and the kind of families they're born into, very much like Rich Dad, Poor Dad, sort of sets people up for their financial future in a lot of ways. But I think that we need resources so that if people want to learn more about their money and do the best and have those lessons that other people just have by their luck of birth, that there are resources for them to have.
Yeah, I totally agree with that. And I must admit, from that Rich Dad, Poor Dad, the one that sticks out for me was he always says, borrow to have good income producing assets, not borrow money for lifestyle assets like a nice car or that. Yeah, so I enjoy that. You must have actually heard some great money tips over the years.
Well, I go back to the basics, and right. They're so simple, but it's a good reminder for people. Don't spend more than you earn. Don't look around you and think that you need all the things, the accoutrements that other people around you have. You don't know what their financial positions are. You don't know what they've borrowed and so on. I think you've got to figure out what it is that you value and just spend on that. And so I think that tip, spend less than you earn, is so important. And what you just said before about, you borrow for income producing assets. You don't borrow for assets that are going to devalue over time. And I also love the one to pay yourself first, yes. And that's another Rich Dad, Poor Dad one, put your money away that you're going to save first, because at the end of the month, you're not going to keep that. It'll be in your wallet or, in your account that you can spend. I think if you've made a commitment to put it aside and have it as an investment, then that's a good tip.
Yeah, the pay yourself first is probably, yeah, one of my top 2 or 3 tips, because it actually applies to me. I, try to sort of, well, whatever I had at the end of the month, I would save. And of course, there was never anything at the end of the month. So paying yourself first. And in the end, I just even automatically had the bank take it out. So I didn't even have to even think about it.
Yeah, absolutely. I mean, just now I've walked up the street and I knew how much money I had to spend in my spending account. Well, I came back with virtually nothing because I thought, oh, well, I'll buy some extra coffee and I'll get that cake and I'll, post these letters. It's just so easy to rack up the expenses if you don't have a better plan.
And not just spend less than you earn. It seems to be, compared to, especially when I grew up in the 70s and 80s, there's just so easy access to debt. Credit cards and now Afterpay and so on. What's your view on that?
I think that definitely should be something that's taught at school, because nothing is for nothing. Banks are not doing you a favor by lending you money, nor are any of these other businesses. And I think you've got to understand what works and be that little bit cynical and figure out what their business plan is, because they're going to be making money somehow, and somehow you're going to be paying for it. So I think you've really got to, look under the bonnet of how these things work and make the plans accordingly. I know that, when people get loans and they come away and they go, wow, the bank's going to lend me this much money. Well, it's not a gift. They're selling you this money at a particular rate and they're making money on it. And I feel about, whether you get a loan and it's fixed interest or it's variable, well, the bank's not going to lose. So you've got to do whatever it is that suits your circumstances, because one of them is probably not better than the other. They're probably pretty even, because again, the banks are not going to lose on that.
Yeah, no, totally agree on that. So just further, because you're just talking about that, yep, you should be in your own interest and not what the bank's is. So do you actually have any tips to how do people to actually look at credit? I know, for example, other tips on credit or debt, because I know, for example, what you said before about just because they lend you the money doesn't mean you need to use it all. And I know when someone gives you a $10,000 credit card limit, people think, well, that's how much I can spend, but it's actually how much you can afford. So how do you talk to younger people about that?
I think that before anybody goes in to get a credit limit, whether it's on a credit card or a bank loan, you need to figure out what you can repay. So it's pretty easy nowadays to plug in the numbers into any of the bank websites to see, what the repayments are on levels of debt. And you've got to work out, and if it goes up 1% or, up a couple of percent, if you can still afford those repayments, because that's the relevant number for you. I remember a few years ago, I went into a bank to get a loan for an investment property. And the bank manager said, oh, well, let me figure out what I can lend you. And I was thinking to myself, I don't really care what you think. And I didn't tell him what the sum was because he never asked. And he came up with this sum that I would feel sick being in debt for, and then I went to another bank and they said, well, what do you want it for? And, we can lend you this much. And it was a much better fit because I felt like they were listening to me, what I felt comfortable that I could pay back. So I think people have to take a bit of responsibility for what they actually want to achieve with what they need. And I think people need to, I know the property market's red hot and things are very expensive, but I think people need to figure out what it is they're really comfortable borrowing, and whether they really do need, the big house with 4 bedrooms and the swimming pool and big gardens and an entertainment room and whatever else. If that's going to make you uncomfortable, then I think, think of your other options.
Yeah, I think trying to keep up with the Joneses has always been doomed to try keep up with that. One of the things you're sort of saying about the investing and buying a good property, I'm seeing it definitely a lot for millennials, and I just heard the term rent vesting, where they may have grown up in inner city Sydney, realise they can't afford it now that they're adults. So they'll rent there, but then they'll invest elsewhere for a property that they can afford. Now, those sort of tips I know probably leading into your book, The Joy of Money. Those sort of tips I know I've read there that we're discussing that a lot of millennials are reading your book, and that may have not been the target audience you originally thought. So does that surprise you?
It has surprised me. And I think millennials are a lot more switched on. And I think information is much more freely available. People do talk about superannuation, the property discussions out there all the time. There's a lot of talk about afterpay and so on. So millennials have the opportunity to be really clued in on financial things. And the rent vesting. Well, there was an article recently that talked about, which suburbs are cheaper to rent than buy, looking at the typical mortgage in those areas and, the income that you make from the rent. I think, if you're going to make serious decisions with your money, you need to do some research. But it is an idea that people are to get into the property market, buying where they can afford to buy, but living where they want to live. And I think, that's a good trade-off for a lot of people. And then, down the track, you figure out whether that's still, a viable solution for you or whether you need to change your options. And what we do talk a lot in the book is you've got to understand your values and your goals before you see an advisor or before you go and make any plans or, get a loan. You've got to figure out what it is that you really value. And if it's your time and, your time with family and being close to loved ones, you might need to buy in a certain area, and then that premium that you pay, it is important and worth it to you. But if you're buying to be near these friends that you want to impress, is that really important? And is that going to be a long-term goal? We don't try and discourage people from spending money or making the decisions they want. We just try and make sure people are very conscious about those decisions and what they might be sacrificing to achieve whatever it is that they want.
Yeah, totally agree with that. You need to get your values and goals right first. As part of any basic plan, and then go from there. So The Joy of Money, which you wrote with Kate McCallum, it is just a wonderful book. So, well done on that. Is there anything surprised you about the book or the feedback, I suppose, that you would have received so far?
The most surprising thing is what you referred to earlier, that we wrote it for people, over 40, really thinking that that's when people start to look at their superannuation and they start thinking about their finances and they're ready to make a change, or they're being forced to make a change, whether it's a relationship change or a job change. And that's when you start, looking at what have you got, what are the options that you can afford to make. What we were surprised at is a lot of younger people are getting interested in their finances and trying to set themselves up for the future. So that was our biggest surprise.
Yeah, and I know the main audience, the way it is targeted at women. And so actually, I'll probably happy to ask you that question, if you don't mind, is why did you see that there was a need for a book targeted at women and money?
So for me, it's always been about words and language. And I think so much of financial services is written by men for men, and it's in very masculine language. And I think women feel excluded and uncomfortable about it. Like, we don't look at, putting together a portfolio worth a certain amount of money. We look at, we need this money to be able to afford to send our kids to private schools, or buy this house, or retire at this age, or move to whatever it is we wanted, wherever it is we want to go. So it was about making money more conversational, in that it's what you need to achieve your goals. And so not talking about it as a discrete concept. And I think, in a way, that's also what we try and do in money. We cut out the jargon. I think, we're sick of hearing jargon all across financial services, and it is very exclusive, and that's no good for any of us, because it allows people to feel intimidated, and people who are in financial services to charge ridiculous amounts for whether it's advice or products or things that people just don't understand, where they could be quite simplified.
Yeah, no, I totally agree with that, because I've mentored young advisors over the years, and we sort of do case studies, and they will start saying TTRs and TPDs and all of these other acronyms. And I say, it always goes back to, would your mum or dad understand what you just said? And if they don't, why would the client sitting opposite you understand that? And so it is something advisors, I don't know if it's subconsciously, they might want the client, the potential client, to feel like they know what they're doing. And so, but yeah, you've just got to be eloquent but simple.
I think most of it probably is subconscious. You're in the industry and everybody around you speaking in this particular way.
Yeah.
It's very industry based, and we don't always look at the clients. And my role at Money, and my role has always been to sort of translate things for people, because we shouldn't be excluding anyone.
Yes, and I got that tip when writing the Money Sandwich: make it simple and conversational. And I was lucky enough to be introduced to an editor, David Brewster, who, while a very good editor, did not have a lot of experience about money and financial matters. And so was able to question me on any strategy or technical matter until we had it right. Yeah, because you need to be confident. And if my editor was confident and fine with it, so would Mum and Dad Australia. As even if you're trying to make it not sound technical, it's hard not to fall into that trap.
And I found in journalism for a long time, it was often people who didn't understand whatever the subject was we were tasked to write about that did a better job, because you'd be digging to get it to a level where you could understand it and you could explain it to someone. And like you said, we often looked at that. Can I explain this to my mum or dad? Is it simple enough that they will understand? And also, apart from will they understand the language, it's like, what is the point that you're trying to make? Will they care? Can I interest my parents in this?
There's a wonderful cartoon I put up if I do a talk to advisors, and it just says there's two people sitting in the car afterwards, and it says, how hard was it to look smart for an hour? And yeah, it's that sort of thing. Now, one of the things that I really wanted to, when I was writing, was to actually pick the 50s and 60s market. And in the back of my mind, that's mum and dad, but for a lot of times it is just mum. And I was very conscious that a lot of my clients were widowed or divorced in their 50s and 60s. And these were very, very clever women. But when it comes to money, they were just flabbergasted. They were just worried, and they were getting anxious. And so there really is a lack of education, especially for women. And so that's definitely a need you're filling. But is there any other thing? Like, I know there's a lot of people doing webinars and podcasts, and there's more information, but a lot of that does seem to be aimed at millennials and not the older market. And we do need to do better there, don't you feel?
I do feel that. I also feel that sometimes it's a bit generational, so that when those millennial women get older, they won't be in that same situation. And unfortunately, we're in a situation that we're in because of how the industry's been for so long. So I think there will be a gradual change, but there does need to be a focus on women and making sure they understand. Like, when I first got into financial services, I'd have advisors literally talking over my head because I was a woman, and they would assume that I don't understand. Or, in so many businesses, you walk in as a couple and the man gets the attention if it's cars or if it's finance or if it's anything home renovating, all that sort of thing. It's got to go. It might be unconscious, bias and discrimination, but we still see it. And I think it will grow out, but I think the language is something to focus on today, and just assume that people will understand if you can make the effort to explain things to them. And if you're a woman in your 60s and you've never been in control of the money, and suddenly you've inherited or you've been given a lump sum of money to deal with, it is intimidating and it is difficult. But I think, by the same token, we're always trying to tell women you've got to be involved. In a relationship, there will always be one person who takes the lead in finances, and that's fine. And often it is the man, also fine, but still have an idea of what's happening, because it's your money too. And you've just got to be aware.
And do you feel as a profession, we need to do better so that women, exactly that example you used, know where to turn to?
Absolutely. When I hear stories that women have, never had their own credit card, or they've never done the banking and stuff, I'm just horrified. But I would be equally horrified if a man told me the same story.
Yeah. I do know when I have seen, when I've been doing advising for over 30 years, and even though I'm now turned to coaching, but when I was first taught, it was only to see the man. It was just, don't even bother having an appointment with both. Whereas at least now, when I left the profession, there was no question. You have to see both. You have to get the sign off from both. And I think it was a long time for our industry and profession to change, but at least things are changing. But I do feel, we do need to get better for people, because we ran the Consumer Expo about 3 or 4 years ago. And the people that came to that just said, where have you been all my life? We need things like this so that we can go, because we're not going to go knock on an office door, but we'll come to something like this where you're providing information. And I feel not as uncomfortable.
Well, I find it odd. I'm an only child, and my father always treated me, equally. Never expected that I wouldn't be able to do any career that a man could do, or I found it really surprising that discrimination existed, and there was that kind of sexism. And I feel that you've got daughters. How can you think that they're lesser people, that they don't understand it? It's incredible that this has been sustained for such a long period.
Yeah, it is. Yeah. So, okay, that might even be a nice lead into a question I sometimes like to ask, is say from 10 years from now, and if you look back and what your book and others have helped to achieve, would be something you thought, well, okay, I look back, yep, that's changed. I'm really happy about that.
Yeah, I think so. I think I would like to think that we've increased the confidence of women to just get on with things, to actually make decisions. And, say you look at your superannuation, everybody has it now. And you've got to look at, well, am I happy with the amount I'm contributing? Am I happy with where my money is invested? Do I really understand? Do I have insurance coming out of it? And just to take control. And you don't even have to make changes. You've just got to be conscious, if you're not making changes, that is also a decision.
Yeah, and you bring up a good point about the super, and contributing and also investing, and it is just one of my, get on my high horse, is that 80% of Australians are in the balance fund, and with just a tick of a button, they could be in the high growth fund. And this is not advice, but just history shows that high growth gets an average of 2 or 3% better. If you look at 2 or 3% over a long period of time, which is super, that makes a phenomenal difference to your final amount.
And I think, again, it's about language in a lot of cases, because I know a lot of women who are in balanced funds because they think that it's safer and so on, but they're not really understanding, that you are risking not earning more money. And that in itself is a risk. So I think there needs to still be a lot of education around that, because, I'm seeing it with really smart women.
Yeah.
And there's probably smart guys doing it as well. But yeah, there has to be a lot more discussion about that in superannuation. And I know a lot of the super funds are even, changing their life stage options in super funds so that they are high growth for longer in someone's life.
Yeah, and we are all living longer. That's the other thing too.
Exactly.
That's one of the things which I call the sandwich generation. Yes, we've just been talking about millennial children, and they're living at home longer than they have ever. But also our elderly parents, as well as ourselves, are living longer, and could be, once you retire, you could be still around for another 30, 40 years, and you need your money working as hard as possible for that. So I know people, once they get to 65, say, oh, I should be more conservative. Well, no, you need your money working as hard as possible for as long as possible.
No, that's right. And, you've been in the industry a long time, and that probably has changed. The discussion around that probably was quite different. Maybe 20 years ago, you probably were telling people, actually, you probably do need to, deleverage and come out of those high growth investments.
And it leads to another point, that it's never too late. And I know you talk about that in your book, that, okay, yes, of course, it'd be nice to have another 30, 40 years of work and be able to contribute more. But, if your children have now left school, your mortgage is under control, that last 10, 15 years before retirement, you've got really good chances to actually boost up your super, boost up your contributions, and get your money working harder for you.
Yeah, and I think what's really great today is that you do have tools to see if you contribute an extra $10 a week to super, or $50 a month, or whatever it is, you can see the difference it's likely to make to your eventual retirement income. And I think that is inspiring in a way. You can actually see that you can make a difference. But one of the messages that we really do want to get through in the book is start today. It's not too late. Don't beat yourself up about any decision that you've made in the past, because you can't change that. Just start today and look at what you actually can change. And if you only have 10 years, before retirement, well, look at other ways that do you need a second job? Do you need to, retrain and earn a higher income? Do you need to just put aside more money each week? Do you need to save money somehow? Do you need to sell some stuff that's around your house? Look at the other options that you possibly have.
And you do talk about, and something I really do believe, get help. Definitely have a mentor, have someone you're accountable to. Of course, if having a plan and dealing with it yourself, you're busy. Life is busy. It's too hard.
And this is another good thing that's changed in finance and discussions about it, is that people are more engaged and people do talk about it. People do talk about where their super's invested, and millennials are talking about, where they've bought shares or ETFs and whatever. So the discussion's out there. 20 years ago, it really wasn't. It was quite uncommon. And maybe, when we're in financial services, we talk about it, but outside the greater community, it didn't really get focused on it. And I think it's really good to hear stories, even if they're not good stories, of someone who might have, lost money because they borrowed, some high interest type loan, or, you learn from other people's mistakes. So the more conversations that are out there, the better. And I think it's also very tied, your income is very tied to all of this. So I think you've really got to pay attention to your career and to earning the most that you can, and to upping your skills and making sure you're getting the advances that you need to get to make your plan work.
And I also, something I know you believe in is having that safety net. So you just mentioned there about your income. It's tied to everything you do, and so it's worth protecting. And we see so many people don't have appropriate insurance, and they don't even have a will. And we do need to fix that.
No, absolutely. And, it's icky talking about a will and, what will happen if you die. Well, you're going to die at some point. So you may as well have a will in place. And, if you're not in a position where you've got a family and it's obvious where your money's going to go, it doesn't matter. Just have a will in place anyway and update it as you need to. But just have something there, because, people will be feeling bad enough if you die. To then have to deal with money issues on top of that is too much. And, the insurance side of it, it's obviously not just about death. What happens if there's an accident or you're incapacitated and you can't work? Well, how do people think they're going to pay for that? That's a huge expense now. And with medical advances, you probably are going to live, even if you, do have issues down the track. And I think they're all things that you really have to think about.
And people I know would say, if I say, I'll talk about insurance, say, yeah, I've got insurance. And I say, yeah, but do you know how much insurance? Oh, yeah, I've got insurance through my super fund, so I'm sure it's fine. And you sort of, it's one of you sort of talking before about super. You need to know what's there, how much is there, where it's invested, and how insurance, and where you're beneficiary, if you've actually got that ticked off as well.
Yeah, insurance is such a complex area, and it's so individual that I think if there's only one thing you're going to see an advisor about, make it insurance, because it's so hard to navigate it on your own. Like, where does it go? Who does it get paid to? Are you updating it when you need to? How much are you paying? Is that insurance company still, the best one for those sorts of issues? I think that it's just a minefield if you don't know what it is. And, most of us aren't working in that industry all the time, and things change so rapidly, and they have really changed a lot in insurance over the last couple of years.
Yeah, it really has. Well, for yourself, I know you're the type of person who always keeps busy, and I know the magazine, the website, you're actually doing your own podcast. Is it Keeping Up with Money? Is that keeping
Friends with Money?
Friends with Money, sorry. And so is there another big project? Is there another book on the way? What's your thoughts for the next couple of years?
Kate and I are talking about another book we would like to explore further. How we can help people, money and relationships, that sort of thing. And I've got some creative things on the boil as well.
Brilliant.
So, yeah.
I know I've known you for a long time, and you're one of the busiest people and most active people I know. So no, it's great. I knew there'd be something. I think we've covered a lot, Julia. So I really just appreciate your time. And one of the things that we like to ask all our guests is the final bite. Is what's probably the best piece of advice you've ever been given?
Well, when I went to England, my dad said, never let the weather put you off anything. And that was, that was great advice going to England, but it is, you've got to really treat each day as a new day, and you've got 24 hours in that day to make the most of what you have and what you can do. And pretty much don't put off what you can do today. I think that's really important. And I also think just start early when it comes to finance. Just start.
Yeah, take that first step. No, Julia, it's been wonderful having you on the show, and just really appreciate your time.
My pleasure. Thank you.
If you'd like to buy your own copy of The Joy of Money, it is available on all major online retailers. Thanks again for listening, and if you want to speak to me or have any questions, feel free to either email me on admin@themoneysandwich.com or visit my website, themoneysandwich.com. Enjoyed this episode and want to hear more of A Bite from the Money Sandwich? Make sure you subscribe on your platform of choice so you automatically receive each episode as soon as it's released. See you next time when we take another bite from the Money Sandwich.